Hi, Christina Lynn here with Lynn Financial. I'm coming to you today as Charizard, the Pokemon, because I am presenting part two of, I think, a two-part series of an intro level cryptocurrency course here. Um, okay, so I love talking about money. I have a passion for helping people, average people like myself, become above average when it comes to handling their money because financial savviness is a skill that you can master. And I've really been interested in the blockchain space. I'm interested in cryptocurrencies. Right now, it's super speculative. You have to really have high risk tolerance if you're going to get into this game. But the problem is that I've seen, at least, especially in the part of the world that I'm in, is that not many people understand like what it is and how to get involved because it is pretty complicated. Especially like the farther down the rabbit hole you go with like wanting to invest in different cryptocurrencies, it's pretty complicated. And I'm still figuring it out too. So I consider myself a beginner. So if you are advanced and you're just watching this because I'm wearing a funny hat, you're going to get annoyed because I'm keeping this very basic, not using always the proper terminology because I want it to be something that a beginner could understand. Um, and I don't have a technology background, so I think that's actually helpful for helping beginners because I don't always use like the high level lingo. So anyway, I wanted to quick back up a minute and talk about the difference between Bitcoins and the rest of the coins that you might hear. So Bitcoin was the first one invented by Satoshi Nakamoto. And that is right now kind of like the gold standard of cryptocurrencies. But since then, blockchain technology, what was invented by Satoshi Nakamoto, has been kind of like copycatted by other brilliant people. So it's okay that it's being copied. It's not like it's a scam or not like it's an infringement of tech copywriting or anything. Satoshi Nakamoto wanted this technology to be presented to the world, and he's not taking credit for it. Anyway, sidetracked. There's blockchain, Bitcoin tech. I'm sorry, Bitcoin cryptocurrency is the main one, and then everything that's come after that is pretty much considered an altcoin, ALT coin, altcoin. Lots of different options there. Um, there you have to be careful because not all of them are cryptocurrencies. A lot of the ones that you'll see in here or see on exchanges are actually ICOs, initial coin offerings, and they're tokens. They're like a utility token. So you have to be careful. Like you should know what you're getting into because it is really complicated. And you can get in a kind of above your head and lose your shirt on it if you're not careful, if you don't know what you're doing. So user beware. Um, so all of the altcoins also operate on blockchain technology, but the software, like the code that they use, is a little bit different than the original Bitcoin. But all of it is using that blockchain technology that I explained in part one of my Crypto 101 course, where it's the public ledger, peer-to-peer network, decentralized. Um, some of them have different angles that they take too. So you can see all the or like angles or specialties. Um, they're focused on something specific, a problem that they're solving. Um, Check out all the different options and you can see the market caps of each one on the website coinmarketcap.com. Again, coinmarketcap.com. So again, be careful because not all of them that are listed there are cryptocurrencies. There are the ICOs, or there are companies who are crowdfunding to raise money for their company, and they'll give you tokens, not coins, in exchange for you investing in that ICO. And that is really what's under scrutiny right now with the Securities Exchange Commission, the SEC. They're really under the microscope right now, and they're kind of what's giving cryptocurrency a bad rap right now, are those ICOs. So There's some good ones out there too. I'm not saying they're all bad, but that is where a lot of the drama is coming from. So be careful that you are getting a cryptocurrency, not a utility token. Um, okay, so now basics 101, how to invest in cryptocurrencies. Um, the first step is you're going to need to download some apps on your phone. You need to get the Authy app, Authy app, and or the app Google Authenticator. What these apps are it's a way for two-factor authentication. It's like heightened security. I mean, you've heard before that scammers or hackers are coming in and like stealing people's SIM cards and that kind of thing. So you're hopefully you're heightening your security on everything from your email to your phone to your bank account, that kind of thing, because there are hackers out there. But anyway, this two-factor authentication, I'm saying that wrong, two-factor authentication is they're by two companies mostly that are used, Authy, Google Authenticator. It's like a second tier of security that a lot of the exchanges that you buy the cryptocurrency from, they require that you have this, so get it set up. Second, you need to set up an account on an exchange. Just like if you were gonna buy a stock, you need to set up an account to store to purchase and store the stock in. Um, you need to set up an account on an exchange that sells cryptocurrency. Um, and it needs to be a special one because not all exchanges go from the US dollar to cryptocurrencies. They might already require you that you have like Bitcoin or Ethereum, an altcoin, as a base, and then you can trade into some of the smaller altcoins. So the two that I use the most, Coinbase is the dominant one in the United States. Coinbase, COIN base, coinbase.com. That's the most common one. It's very user friendly. They have a phone on your app, or I'm sorry, the other way. There's an app for your phone that you can use that is just super duper simple. And you're gonna link up your bank account to, or use a credit card, set that up with Coinbase and to transfer the US dollars into your first cryptocurrency. So it needs to make that shift from fiat money into the crypto world. And Coinbase is where you can do that. Or one that I recommend is Gemini. Their owners are the Winklevoss twins. They're at the helm of that. They just have a little bit lower fees and a little bit more options. There might be other exchanges out there as well. When I first got in, I kind of had trouble finding an exchange besides Coinbase that would let me in because they were so overwhelmed. So that's kind of just what I've stuck with. But could be other ones. Gemini or Coinbase is what I recommend to people. Your account might need to be verified by the exchange prior to being allowed access into the exchange. Because these exchanges, Gemini, Coinbase, they're all kosher with I shouldn't say that. I don't know if they're kosher with the SEC, but they have really stringent rules on like they will let onto their exchange. So like you might have to upload your driver's license or passport, answer some questions to verify your identification. And so it might take a couple days, I don't know, depending on their volume, it might take a couple weeks. I've known people who have waited a month or two before they got access to their exchange account. So after you get that account set up, you're going to link your bank account or credit card to your new account. Let's say it's Gemini. And then you can transfer money over. Coinbase, I think you can transfer a max of 5,000 a day. Gemini allows a max of 500, so that's another difference. And so from there, you can immediately purchase, I think I could be wrong, but I think you have to start out with like Bitcoin, Ethereum, Litecoin, or Bitcoin Cash. Um, and then immediately you'll be able to trade from that point between those other ones on the exchange. But if you want to take the money out of the exchange to bring to another exchange or to transfer out for safekeeping, you have to wait for it to settle because it's a bank transfer. So that's what we talked about in part one is like the bank transfers take a while to settle. I mean, 3 to 6 days, maybe, or business days. It could be more than that. You have to wait for that USD deposit to clear before you can take any cryptos that you bought out. Um, After it clears, then you can move it to a hard wallet or a soft wallet or just write it on paper. Or you can transfer it to another exchange to purchase other coins or tokens that are not sold on that exchange. So the entry exchange has the basic ones that you'll want to get started with. Bitcoin, Ethereum, Litecoin, Bitcoin Cash. Any more fancy than that, you then need to transfer out to another exchange because those other exchanges, the secondary exchanges, they don't allow at this time for you to come in with US dollars or whatever your fiat currency is. It needs to come in as Bitcoin or come in as Ethereum or another altcoin, um, if that makes sense. So with that money that you get, the cryptocurrencies that you get, the way you identify that that cryptocurrency is yours is you have two keys that are associated with that cryptocurrency. One is your private key, which is super, super private. You don't ever want to tell anybody else about it. The other one is your public key, and that one you can share with other people. You can say, hey, I would like to be paid for mowing your lawn in Bitcoin. Here is my public key address. Just send Bitcoin to this address. They never see your private key. And then you can then look at your account. You have to use your private key to look at your account. But then your new lawn mowing Bitcoin will be right there. It's so awesome. So the way that these keys are generated is really complicated. I don't know much about it. I have a formula. It's generated using a formula K equals K times G. It's something about an elliptical curve cryptography, which is how you get a private key. Really complicated. I think that they're working on different formulas for this too, but it's a way of encrypting that's unhackable. Um, so again, to recap, you can show people your public key because that's how you can send and receive money from your crypto bank, but do not show anybody your private key. Super important. Make sure you remember that because if you show anybody your private key, they can then access your account and take all your crypto and send it somewhere else. And there is no, like we said in part one, there is no 800 number that you can call or chat room or like there's no customer service that's going to help you get that back. It's gone. I mean, I have heard of exchanges like helping with that, but they aren't obligated to. So be really careful. Um, so you might be wondering, why have you heard before of all this scams that are going on that are people are stealing Bitcoin and other cryptos from each other, like Mt. Gox, that was a first exchange that was hacked, or I think I don't know one of the first major one at least. It is happening, but you have to remember that it's not the blockchain technology that's being hacked. It's happening on centralized systems. So it's happening from like it's called social engineering, which are like bad guys, hackers that are not wearing Pokemon hats. Um, they're like going in and analyzing your Facebook page and trying to figure out like how to maybe like hold blackmail you to get your keys or something like that. It's called social engineering. Is how some of it's done, and others are bad guys, hackers are hacking into centralized systems in order to like with to get it. And another big one that I remember is like a phishing scheme. So like um, so you think that you're going to the right exchange, like Coinbase.com, but instead of the coin I in coin, it might be an L in coin. So like you think you're going to Coinbase.com, but you're going to Coinbase.com because it's so subtle that you barely notice it. And then and you enter your information, and there they go, the bad guys have your information. So it's the stealing is going on from bad guys doing social engineering, not the blockchain technology being hacked. So be really careful with your private keys and be aware from phishing scams, and be aware that some of these exchanges and different applications that you're using is not built on blockchain technology. It's built on a centralized system. So know the difference between the two, because you're not protected everywhere you go. Um, all right, so now remember from the first part that the blockchain records are keeping track of ownership of the Bitcoin. So when you have your public key, the blockchain system knows what public key is associated with the private key, and when you take money out of that and send it elsewhere, everything is tracked. So you can't hide anything. It's there as long as you're keeping your private key as secret. Um, so let's talk about how to store your coin, because you're not going to put it in a bank, because remember we just said that the records are all stored on that public ledger in encrypted numbers. But what happens a lot is, because those numbers are encrypted, people don't want to write them down on pieces of paper because they're long. I don't know how long, maybe like 30 or 40 characters, uppercase, lowercase letters, numbers. And so there's a lot of room for human error when you're writing that down. And so there's this thing called a hot wallet. I think it's also called a soft wallet. And it kind of act like you think it works like a bank, because those wallets store your keys, your private keys in a safe way. But it's not actually storing the money like a bank would store your money, because all of your money is stored on the blockchain. It's all in the numbers, but the wallets are just storing your keys so you can like organize them and get into the wallet with like a more easy to remember password, if that makes sense. These are typically not as safe, or at least so I have read. I don't know much about it, but from the research that I've done, it sounds like wallets are a vulnerability, as like a soft point for hackers. So be aware of that. So keep in mind that if you need access to your account and you need help with access, the wallet service is not going to help you. They're not like a bank. They can't access your account or send the funds for you. You can't recover or change your private key. You can't recover or reset your password. You can't reverse or cancel or refund transactions made by mistake. Or if someone, yeah, you can't freeze accounts. None of those functions are available in cryptocurrency in general, and not within a soft or hot wallet. So you and only you are responsible for the security of your cryptocurrency keys. So be diligent to keep your keys in a safe place, and your password. The private key is also sometimes called a mnemonic phrase, key store file, UTC file, JSON file, or wallet file. I know that the mnemonic phrase is common, like sometimes it won't be a string of numbers and letters. It will be like a series of words, like maybe 12 words that doesn't really look like a key, but it'll be like mom, card, dance, impulse, tractor. It'll be all these different letters that will be in a certain order that you have to write down. So that can also be like a key. If you ever enter your private key on a phishing website, remember we talked about you have to be really careful that you're on the correct website. You will lose all of your cryptocurrencies. So be sure that you're on the right website. a trick to avoiding this is just to bookmark every website that's important to you in the crypto realm so that you're not like Googling it and then selecting one of the options that pop up below because one of those might be the bad guys. Don't want that. Um, so that is one way to store your money on a hot wallet. Another way for you to store your money is on a hard wallet or a cold wallet. Um, that's offline. You're taking it off the computer, off the internet, and you're putting it onto a device. I didn't bring it with, but it looks like a little USB drive kind of. Um, there's the two brands that I know are Trezor, Trezor, or the Ledger, Nano Ledger, spelled just like that. It sounds Nano Ledger. You have to purchase them. You can get them on Amazon or on their device on their websites. And they're kind of expensive. I think they're like over $100 to get these, maybe $75 to $150 to get these, maybe more. But that is really the preferred method for storage because it's the most safe. It's not, as long as your keys aren't stored anywhere on your computer, don't put them on Dropbox, don't put them in notes, don't put them like on your desktop, don't have it anywhere on your computer. And so as long as your stuff isn't, your keys and passwords aren't stored on your computer anywhere, the having it offline in your little hard wallet, your Trezor, Ledger, Nano Ledger, um, you're safe. And so, or you can also actually do a paper wallet where you like write it down on paper or print it off when you see it online. You can do that as well. So, if this seems like this is a lot of work, like, oh my gosh, you have to, go to so much work to do all of this, again, this is the point of decentralization. You're taking the work of security that's already done around your financial world, but you're paying someone for that service. You're taking it away from that third party and you're doing it yourself. So that is the point. There is more work to it, and if it seems like too much work for you at this point, just wait until the space develops more and hopefully it will get easier to use in the future. But that's the way it is right now, and take it or leave it, right? Um, I mean, people are loving this because you're not relying on your bank, you're not relying on a government. No one else can see what you're doing with your money or when you want to move funds. And you're not relying on this security of an exchange or a bank to keep your funds safe. So, there you have it, folks. Okay, let's talk about how to store your keys. Um, Now remember, I've repeated myself here, but it's so important. Do not show your private keys to anybody and do not lose them. I don't know the statistic, but there is like quite a bit of Bitcoin that are dead because people, I think it's like a third of Bitcoin that's dead or burned because people forgot their passwords. Or they like threw away an old computer. I've heard that before that had it stored on it, and it's gone. So here's some tips to store your keys. Make a backup of your private key and password, and do not store it on your computer. Write it on a piece of paper or save it to a USB drive, something like that that is not on your computer that you can take away and be safe. Put it in a safe deposit box, something like that. And then one more tip that I read, that if you have more than 1 week's worth of pay in cryptocurrency, it's really time to get a hard wallet. You want to protect yourself. So just don't make excuses for how much work it is. I know, but I'm hoping that you'll thank yourself later for going to that extra effort because hopefully all of that extra work will be worth it. I don't know. I can't guarantee that, but I hope so. So one question that I see a lot is which current cryptocurrencies should you invest in? They ask me like I'm going to advise them on that. It is so speculative. I really don't advise anybody to get into this right now unless They have a super high risk tolerance. They're willing to lose it all. Like this should be fun money for them. You know, I'm new into the space, and just in my short amount of time, I've seen it just go up and down so much that unless you're totally on board for that and get, excited about that and are comfortable with losing everything, just don't get into it at all. But beyond that, I've heard experts say, like Ronnie Moas is one I hear a lot saying that you should just stick with the top 20. When you go to that coinmarketcap.com, you'll see all of the currencies there ranked by size. Just stay in the top 20 there. ICOs, look into them before you do it because they might be an ICO that's not a cryptocurrency. And be really careful with those right now. They're in the United States, they're really under the microscope. And I'm not sure what's going to happen, but the SEC has made a public statement that all ICOs are not tokens and they should be considered securities, and very few of them are. So who knows what's going to happen with that, but it could be a real mess that you may not want to get yourself into. So just be really careful of that. Um, Another thing to like take into consideration, I know there's so much excitement. I mean, it causes me to wear a Pokemon hat. Like I'm so excited. But um, in all seriousness, that's also a bit of a danger because just last year, well, let's see, 2016, apparently there weren't much sales going on in the cryptocurrency world. The total was 96 million. In 2017, it went to 6 billion. That's an explosion. And of that's 40% of the IPO market. So it's really a monster right now, and we don't know what's going on with the regulations, and who knows if this is a bubble. So you need to be really careful that you don't get swept away with all of the hype too. But at the same time, I do think it's really exciting, and I don't want to be left behind either. So I'm trying to educate myself, and I hope that this inspires you to look into it yourself as well and get as much information as possible. So I hope that you found this information helpful. Again, super basic level. I am a non-technical person, interested in technical things. So I do try to break it down to really simple terminology, not only because I think other people can understand that, but that's just the way I speak because I'm not an expert in these things. I'm just interested in them. So I hope you found that helpful. If you're looking for more of a curated experience, if you want more personalized help, I do provide that service. Please contact me on the information below, and we can set up a time for me to help you actually get set up with these things, and I can walk you through any troubleshooting that you have. If you have any questions, let me know, but best of luck to you, and be careful because crypto is a wild ride.